Hey, everybody. It is almost the end of 2023, and it has been quite a roller coaster ride for the stock market. The year started off looking like it was going to be a fantastic year. By, say, October, it didn't look like it was going to be a very fantastic year. And now it's looking like that once again. The day before we recorded this, the Dow Jones just hit a fresh record high. It could have done so again by the time you're watching this. And it's kind of really been a turbulent time. Before we dive into some stocks that we think are too cheap to ignore still, check out the link you see on your screen for a message from my sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So, as I mentioned, the market's up a lot. A lot of stocks are up. Um, Tyler Crowe is joining me. We are both going to each talk about a stock that we think is still too cheap to ignore. And I guess I'll start with this one. I think home builders are still a big opportunity. And I'm going to talk about a stock that is up 220% in 2023 alone, and that I think still has a lot of upside potential. I'm talking about Dreamfinders Homes. Ticker symbol is DFH. It's one of my favorite stocks as we go into 2024. And the reason that it's up by 220% is pretty simple. Investors, experts, whatever, really underestimated how well home builders could do in a terrible real estate market. It's kind of the best way to say it. As we were heading into 2023, analysts correctly assumed that because mortgage rates were spiking to record highs and home prices had risen considerably, that it was going to be a very slow real estate market. And they were right. Existing home inventories are still near record lows. The other side of that is that some people do still need to buy homes, and no one wanted to sell their homes because they wanted to hang on to their low interest rates. So some people maybe they have to move for work. Maybe they're forming a household for the first time and renting doesn't work for them for whatever reason. But home builders really kind of filled that gap. And home builders can offer incentives that existing home sellers can't, like mortgage buy downs and things like that. So it's been a really good year for home builders. The stock price reflects that. But now let's look forward. If you're not familiar, Dreamfinders is a relatively new home builder. They were founded in 2009. Since then, they've grown to be the number 14 home builder in the US. So they're not one of the big players, but they're getting there. They specialize in the Sunbelt markets. Jacksonville is their headquarters. Orlando, the Carolinas, where I am, Texas, the DC metro area, and Colorado. Generally places where there is positive wage growth, positive net migration, strong job growth, and where homes are still relatively affordable. There's an affordable housing crisis in the United States right now. It's really tough to find affordable housing in a lot of places. And not only does Dreamfinder specialize in relatively affordable markets, but they specialize in entry-level homes, which, is where people are buying these days. So even after that 220% gain, Dreamfinders it trades for about 11 times forward earnings. I think it's still a cheap stock. It's a strong market for builders right now. New homes are currently making up about 30% of the market. Usually that's about 10%. So record high share of the market. Their numbers look fantastic. Even with an increased cost of capital, their interest expense went up tremendously year over year. They still managed to increase their earnings. Net new orders in the third quarter were up 38% year over year. And there are some long-tailed catalysts as well. Not only are mortgage rates starting to fall, which should bring some more buyers into the market, but we are still short an estimated 3.8 million housing units in the U.S. Now, a lot of that refers to multifamily, really affordable housing, but a good portion of that will be solved by single-family entry-level homes, which is Dreamfinder's bread and butter. So I think it's still very early in this company's growth story. I love the markets they operate in. They use that land-light model that I've talked about before, where they don't actually buy land until they have a house under contract. So I'm a big fan of Dreamfinders. It's one of my largest investments and one that I probably will add to before 2024. Tyler, what are you looking at?
So, I'm going to fulfill my reputation of being the one who goes to the weird place. And I am going to go with Ternium. Ternium is the third largest steel producer in the Western Hemisphere, behind Nucor and Cleveland Cliffs. They are based in Argentina, but about half of their business comes from Mexico specifically. And this is kind of the business thesis around them because, we've talked a lot in the coming, like last year and a half, about the concept of like nearshoring, kind of boosting supply chain resiliency, and a lot of topics like this on the idea of like we're just going to kind of bring our manufacturing, it's kind of a euphemism to say away from China and somewhere else. And Mexico is a big beneficiary of that. Specifically, Mexico has been one of their biggest booming industries has been auto manufacturing, specifically in the northern part of Mexico. Ternium is one of the premier suppliers of steel to the automotive industry in Mexico. So there is a lot of leverage between construction, between automotive manufacturing, and between just kind of general industry manufacturing that they are going to be able to leverage extremely well, I think. And it is a business, despite the fact that it's Argentina. We always hear that like the political stuff when it comes to Argentina that it's a mess. But this is a business. It's actually based in. It has its HQ in Luxembourg rather than Argentina. It's been around since 1945. I mean, if you want to get into the details, an Italian family, 1945, Argentina, a little weird, but that's a little tangent. Uh, but here's the thing that I really like about it. It's good margins, good returns on capital, and has a great balance sheet, and it's trading for extreme discount right now. Right now, if I were to just kind of wipe out all of its debt, it's cash and its accounts receivable account for all of its debt. So I basically get all of its inventory, all of its assets, and all of it for basically for what its market cap would be, and that's about $13 billion worth of assets. And it currently trades for $8 billion as a market cap. So it has about a price to tangible book value of about 0.7. So this thing is extremely discounted, even for a cyclical industry like steel. This is something where I look at it and say, I know this is a tough business, but based on where it's trading and based on like how the market's valuing it, this looks like an extreme discount and something that could be a very good hold for a couple of years when the market realized, hey, Mexico construction's booming. Who's building all the steel? Ternium's going to be the one getting all that benefiting from it.
Yeah, and just before we hop off from here, will you tell us the name and ticker symbol just one more time? For people always comment that we forget ticker
Sure,
symbols.
sure. The company's name is Ternium, SA. It trades on the New York Stock Exchange under the ticker TX. And yeah,
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.